A number that a lot of people pay attention to is earnings per share, and initially our attention is going to be focused on basic earnings per share, and the calculation of this is addressed in IAS 33. The issue when it comes to the calculation of earnings per share are what numbers do we use, what earnings numbers, and what number of shares do we use, and this is going to depend upon what we give emphasis to. Do we give emphasis to the current position, the present, and would call this as being captured by a basic earnings per share number, or are we more concerned about what it's going to look like in the future as a result of transactions that we've already committed to, and we might call this a diluted earnings per share number. We're going to start off by focusing on a basic earnings per share number, and we're going to think about this with some simple examples. Here we have Poor Services. It has a profit from continuing operations and attributable to ordinary shareholders of $10 million a year. Throughout the year, 50 million shares were on issue. And so if we're going to calculate our earnings per share number, we simply plug those numbers into the formula, 10 over 50, and that tells us that we have earnings per share of 20 cents. That's pretty straightforward. However, there are some complications. What about if we have a share issue? So let's just focus on how we'd go about calculating the weighted average number of shares. On the 1st of July, we started the year with 50 million shares on issue, and on the 30th of September, we issued another 10 million shares. How does this impact? On the 31st of March, we issued a further 8 million shares. How does this impact our calculation of a number of shares on issue? Well, it's a weighted average calculation, so we'd say we had 50 million shares on issue for 365 days of the year. 50 million. We have 10 million shares on issue for 274 days of the year, and 8 million shares on issue for 91 days of the year. And so that tells us that we had a weighted average number of shares on issue of $59.5 million. And you can see this set out quite clearly in the table. What about if there's a bonus issue or shares which are issued for free? Now the issue here is that it's really just a change in the number of shares, and it's not really a significant or material change. So what we do is we treat any bonus shares issued as having been issued as from the beginning of the period. So if we had $50 million shares on issue at the beginning of the year, and on the 30th of September we issued an extra $10 million bonus shares, what we'd say is that we've had 50 million shares on issue for the whole year, and the bonus shares will treat as having been issued for the whole year, and so we have a weighted average number of shares of 60 million shares. A rights issue is a bit of a combination of the two, because let's just think about an example here. Poor Services has a 1-for-5 rights issue on the 31st of December at $5 per share. At the 31st of December, the share price was $11 and 500 shares were on issue. The issues here is that when we have a rights issue, there are going to be two aspects to it. One, there's going to be a bonus element, which is a bit like we've seen previously, and two, there's going to be a new shares element, which was also like we've seen previously. So let's just see how this plays out. Let's focus first on the bonus element. First of all, we need to work out what the X rights issue per share is. So before the rights issue, the shares were trading at $11, 500 times $11, plus that's going to go, the value of the company is going to go up by $500, which is $5 times the new shares of $100, so that gets added to the initial value. And we're going to have 600 shares on issue. So that tells us that the X rights price per share is expected to be $10. That compares to a pre-issue price of $11, and so that suggests that there's a bonus element in the rights issue of 1.1. The bonus issue also has an impact on the number of shares on issue because we issue more shares. So there's a new shares element. On the 1st of July, 500 shares were on issue, and on the 31st of December, we issued an extra 100 shares. So to calculate the weighted average number of shares, we'd say that 500 shares were issued for the first 181 days of the year. That's subject to a bonus adjustment of 1.1, and so that suggests that we have 550 shares times 49.6%, which gives us 272. We had 600 shares on issue for the remainder of the year, that's 184 days, that's 302, and the combined effect is that we have a weighted average number of shares on issue of 575 shares.